So if every central bank in the world owns gold and has been accumulating it over the last 6 months more than any time in history, only surpassing last year's first 6 months, central banks have been buying it. So if you revalue gold, you just simply, I mean, look at China. They've been pricing silver $4 an ounce higher than Comex and the LBMA. That's a form of revaluation because anything that is able to be bought here and delivered there will do so. That's arbitrage. What if all of a sudden we say gold is 10,000 an ounce and everyone across the globe sells us their gold? We paid 10,000 an ounce. That's what it's worth. What if they all say, yeah, I like that idea? Because now all of a sudden their balance sheet, which is massively indebted, can be offset with their gold holdings, which just went way the hell up. And now your balance sheet is perfect.
AndySchectman, president and CEO of Miles Franklin Precious Metals, is renowned for his expertise in gold and silver markets. He highlights that central banks are accumulating gold at an unprecedented rate, surpassing last year's record levels. Schectman also points out that China's pricing of silver $4 an ounce above Comex and LBMA signals a revaluation, creating arbitrage opportunities as assets flow to higher-priced markets. The spot price of silver on Comex has risen nearly 25% since the end of last year, with recent prices even higher. Typically, such significant price movements lead to a reduction, where half of the recent gains are often lost, followed by a period of stagnation. However, this pattern has not yet occurred in the current market. Schectman proposes a scenario in which gold is suddenly valued at $10,000 an ounce, with a global offer to buy it at that price. This revaluation could be highly appealing to other countries, as it would significantly boost the value of their gold holdings and potentially offset their substantial debts, effectively balancing their financial statements. While no one can guarantee that gold will reach $10,000 per ounce, such a price is possible even without hyperinflation. It is crucial to conduct thorough research and make informed investment decisions. Gold could skyrocket to extreme levels, where $10,000 might even become as trivial as a cup of coffee. Although hyperinflation of the US dollar is a possibility, it remains unlikely. For instance, Argentina has devalued its peso by 10 trillion to 1 against the US dollar since 1945, and Venezuela is experiencing severe hyperinflation due to domestic issues. Before diving into AndySchectman's video, subscribe to our channel, hit the bell icon for updates, and share it with anyone who might benefit from this information.
If you look at the commercial banks that work on behalf of the PBOC, when they're buying gold from refineries and in South Africa and in Switzerland, and they're doing it by proxy for the PBOC, they're not telling the IMF how much gold that they bought. This is under the table. I mean, it's for them, or is it for the PBOC? And when, it's a convincing argument. They say we stopped buying for a few months, then they lower the premium on the Shanghai exchange, which has been elevated for a long time, to really exacerbate it. And look what happens. The Western price drops. They've been producing 300 to 500 tons a year since 2000. Why? That alone is way higher than the 2,600 metric tons that we're supposed to have. But let me just get down to it and read this to you. Because the bullion banks take care of gold transport for the PBOC, the shipments from London to Beijing are disclosed in UK customs data. The customs data reveals that the PBOC continued to buy gold in May. When it communicated to the market, it discontinued buying it. And that's from Koos Jansen, who's a hell of a writer. And I believe it 100%. I said it long before I read that article that was written on the 29th of July. Because everything that they've ever done and it wouldn't do them any good to, for 18 months, they start telling us that they've been buying gold, but they've been buying gold for 18 years and a whole lot longer than that and a whole lot more. And I do believe gold will be revalued, and it will, if indeed, in every central bank, including where you live. Do you know the name of the account where gold is held on the Belgium central bank balance sheet, or in the U.S. central bank balance sheet, or any of it in Europe? It's called the gold revaluation account. Okay, and the head of the Dutch central bank keeps saying this, keeps talking about, well, I know that we're not allowed to use the gold in the gold revaluation account to offset a liability at this point, and it's only valued at $35 an ounce. It's still the Bretton Woods number in Europe. But he keeps talking about the fact that all we really need to do is revalue the price of gold and make our balance sheet good. You just had Senator Loomis from Wyoming speak at the Bitcoin conference right after Trump spoke. Trump said, I want to create a strategic Bitcoin reserve fund for the United States, Senator Loomis came up and said, I've drafted a bill to do just that and to fund it partially by revaluing the Federal Reserve's gold held in the gold revaluation account. All they would need to do, if they made gold $20,000 an ounce, it would add $5 trillion to the Treasury General account, free and clear. And all Janet Yellen would need to do with no congressional approval is tell Jerome Powell to do so. They make it $120,000 an ounce. It benefits every single country on the planet who all stockpiles gold, and now their debt is paid off in relation to the assets that they have. At least their balance sheet is perfect. So could it happen? Could it go higher than anyone thinks possible? Well, if it does, then it wouldn't make sense to anyone to disclose how much gold they are feverishly accumulating and have been, using the brain dead suppression of the LBMA and the Comex to run cover for draining the exchanges of all their commodities at subsidized, stupid Western prices, which support the illusion of a strong bond market to the EU and the United States and strengthened currency. It's a bunch of crap. And they are like jiu-jitsu, where you use your opponent's leverage against them. That's what they're doing to us. They see the game. I'll give you one more example of why I know this to be true. Two, one, the head of the Shanghai Gold Exchange in 2015 said, when China is allowed to speak at the table, the real price of gold will be known. Two, they just developed the BRICS Grain Exchange, and the person running the BRICS Grain Exchange said, you know, we produce and consume more of these commodities than the West does, yet all the prices are set on the COMEX, and this will change that.
AndySchectman explores the concept of a 40% gold-backed system, with the remaining 60% backed by currency. He cites Vince Lance's view that China and Russia may incorporate partial gold backing into their digital yuan and digital ruble, making up a significant portion of the unit token. Recent trends in gold-backed currencies reflect a growing response to the issues associated with fiat systems. As monetary mismanagement encourages debt, devalues currencies, and leads to poor investments and boom-bust cycles, the negative impacts of fiat currencies drive renewed interest in gold. In response, Russia seeks alternatives for managing its trade and reserves, prominently featuring the Chinese yuan and gold. However, these options bring new challenges. The yuan increases Russia's dependence on Beijing, while gold proves less effective against sanctions than Moscow hoped, and expanding its illicit gold trade remains difficult. Let's get back to the interview.
If you look at, and here again, revaluing the price of gold would do that, but look at the unit. They say 40% gold backing. That means 60% currencies. Now, I did an interview with Vince Lance, and he thinks that China and Russia in particular will try their best to add a partial gold backing to the digital yuan and the digital ruble so that it will comprise the majority of the currency units held within the unit token. But if you have a system that is 40% gold backed, and again, it's a settlement currency, it's not a common currency. Every nation, according to the white paper in Enbridge, will retain their own central bank digital currency. And if you look at all of the countries that make up 98% of the world's GDP, every one of them has a CBDC in operation or development. So they'll all trade their own CBDCs. Right now, you're seeing, like, for example, China trade with Brazil, the digital yuan for corn and soybeans, and they can take that gold Brazil can, send it back to the Shanghai Gold Exchange and convert it immediately into deliverable kilobar gold. Well, what is the unit token? It's kilobars. How do you like that? It's going to be kilobars held that are deliverable upon demand. And so they'll all have their central bank digital currencies, but if they want to trade in something different for energy, as an example, they'll use the settlement currency, the unit, which will be gold and currencies of the BRICS plus nations. And BIS is backing it. The BIS told all those countries in 2017, get your gold and bring it home and start buying it. And then magically, after 2.5 years of massive repatriation and buying, like we'd never seen before, oh yeah, it's tier one. And now we see the BIS is behind this, Project Enbridge, and all of these countries are massively buying gold like never before and bringing it home. You wait. It'll be tied to gold. And the West will have, at that moment, they'll have to do the same thing, or they will, suffer the fate of Gresham's Law, where, the bad money is going to chase out the good money. The good money is going to leave, and there's going to be nothing left but the bad money. So that's what would happen. I just happen to think that there's a lot in store for gold. Now, I don't sell gold or silver as an investment. To me, it's wealth. And I think that you can see that by the actions of the world's most powerful banks. I think they see it as wealth. They're not buying it as an investment, nor did King Tut or pharaohs or queens or emperors or none of them. They didn't own gold as an investment. It's wealth. It has been since the beginning of time, and it inspires confidence. It has a finite supply, and unlike the ability of the West to create trillions and trillions of dollars over the last few years, which has distorted all price discovery in traditional assets. So yeah, there's a lot to be said for where we're going in gold, brother. And I think it's just beginning. And the fact that the people in the West, there's more information that I've given, all of it backed by fact, except trying to put the pieces together. The fact has all been real. Everything I've said to you, it's verifiable, it's Googleable. The people in the West have no idea what's coming, and they can't get out of the way of it. So, listening to this podcast, you'd learn more in an hour about what's true than anything you would learn in 6 months of watching any of the news stations here in the United States.
A rise in gold to $20,000 an ounce could significantly transform the global financial landscape. Central banks' growing gold reserves and moving towards gold-backed digital currencies underscore gold's increasing appeal. As fiat systems reveal their vulnerabilities and countries like Russia struggle with their reserve strategies, gold may emerge as a more reliable financial anchor. How would a $20,000 gold price affect international trade relations and currency stability? We'd love to hear your thoughts in the comments below. Let us know. Share this video with anyone who might be interested in understanding the future of gold in global finance. If you found this discussion on gold revaluation intriguing, make sure to subscribe to our channel and hit the bell icon for more updates. Thanks for watching.